It's three past the top of the hour. Good morning, good evening, good afternoon, wherever you are in the world today. And welcome to the Accountant Joint Venture Program. Now, I am sort of working on my own here today, folks. So just bear with me. I'm just allowing some people to come in. If they come in, okay, leave that go. Now, so just to verify with you, what you can see on my screen at the moment is just a poster there with how I leverage joint ventures with accountants. Is that correct? Very good. Okay, rules of the day. Keep asking me questions, keep interrupting. This is an interactive session, and the more you interact, the more you're going to get out of it. Today, what we're going to talk about is how to joint venture with accountants, how to approach accountants, how to get past the gatekeeper, all those sorts of things. Now, following this today, I will be sending you information brochures on the joint venture program that'll cover what we did today. We're going to be looking at all sorts of things today. I'm going to also be sending you the procedure for finding accounting firms for a joint venture. So we'll be running through that today. Don't worry if you've missed anything. You will be getting detailed notes sent to you on that. I don't send these out prior because I only send these to the people that turn up, because I only want the people that are committed and the people that turn up. This program in the new year is going into a productional situation where I'm working with a marketing company. I'm joint venturing with them to put this out each month, and there will be payment for it. But all of you that are invited, all my coaches, etc., you will continue to be able to attend the Accounting 101 and the Accountant Joint Venture Program, which go hand in hand, of course. You'll be entitled to attend those and resit those as many times as you wish. So without further ado, let's get on with today. I am going to stop on the top of the hour. We're going to go through some stuff, but just it's your day, gentlemen. And if there's any ladies that turn up, I'll just say ladies for the recording purposes. So what we'll do today is just get through this. Feel free to interrupt, ask me questions. So let's start off. The average accountant has an average of 245 business owner clients. Now that source is from the Good, the Bad and the Ugly benchmark report back in 2022. I don't know that much has changed since then. There's not too many.
This is just solo accountants, or this is maybe in the firms.
Say there's three partners in a firm. Each partner would have on average, Jeff, a good question, by the way, each partner would have on average 245 business owner clients.
Wow.
Now, I'll cut straight to the chase with the accounting firms you're looking out for. It's all in the information brochures I'm going to send you. Very detailed there. But don't look at anything past 5 partners in an accounting firm, because you've got 5 indecision makers there. One to 3 is pretty ideal. 2 is good. The other thing we look for in their websites, and I'll be getting onto this again, but I just want to throw these things in while I think of them because they are important. Steve has been working with me with an accountant at the present time, and we're working through this. So I'm mindful of the questions that Steve's been asking me, and great work, by the way, Steve, with that good incentive. And I'm just going to bring those up now so we clear them out of the way, but we'll go through them again. I will be repeating myself a few times. That is intentional because we need to get the word through. Subsequent to this, I will work with you to get you an accounting firm. I will go to a meeting with the accountant with you. I will look at the websites that you've come up with the accountants. I'll tell you what's good and what's not so good. There's some stuff there that's intuition of 30 years. I can't teach you that. But it's just to say, I know this one's not right. The feel's not right. I can feel them. Leave that with me. Save you time messing around. So, yeah, the average accounting firm has 245 clients. So our ideal one is 1 to 3 partners and at least 2 to 3 team members. And the reason why we need the 2 to 3 team members is because we will be doing presentations in their office. We don't want to be doing all the legwork for that. Number one. Number two, we don't want to see their database, which they'll really appreciate. We want to impose on them that we do not want to see your database, but I will instruct you, a champion in your office, just appoint me a champion. We won't be requiring too much of his or her time. And I'll show you all the email material that we're going to give you, etc. Now, all of you in the room have various material for planning events. That's fine. These will be sort of live events. Accountants like to eyeball people. They like you to eyeball their clients at one stage or another. So eyeballing them in that initial presentation is where you virtually do your initial meeting or discovery call, whatever you want to call it. Okay, so now with the 245 business owner clients that the accountant has, how many of those do you think need your help as a coach? What percentage?
50%.
I'd say conservatively 90%.
Okay.
When you start talking, they don't get much advice off their accountants because their accountants are either too busy or they don't want to do much more with their clients than do the compliance. And I'll go through that in some later slides. So today I'm going to show you how to grow your coaching practice on joint ventures with accountants. So let's put the seatbelts on and get roaring. Why isn't my thing working? Okay. Accountants, they're the holy grail for business coaches. Now, as I mentioned, behind almost every door in accounting practice, there sits a strong 7-figure coaching business. You can't get through 245 clients. You'll run out of bandwidth at 15. So, there are avenues beyond that. But let's sort of focus on the fact that you've got a nice nest there. You can virtually hang up the boots, don't have to go to those nighttime networking events and small talk to people. You don't, well, I'd consider, keeping your social media up, but just in a presence matter. You don't have to be making phone calls to people you don't know. This brings you into a whole new era. And it's a pretty good era to be in, but it takes a little time to get in there because accountants are very cautious people. Now, for those that don't know me, my name's Pete Lawson. I've written a couple of books. My favorite book is my Boutique Pizza Chef book, which I will get a copy out to all of you because I'm just having the cover revamped. I'm a coach of coaches internationally, and I say there that I coach accountants, but for a number of reasons, I suggest we don't do that. A lot of accountants, I'm not being facetious here, they are uncoachable. I've written quite passionate about helping business coaches to get aligned with accountants. And for that purpose, I've written one book, Accounting 101. I've written a number of books. I've written strategies for accountants as well, business breakthrough strategies. And my latest book, there's an ebook there, Increased Fees, which I think all of you may have. But if you need any of these books, just give me a hoy and we can arrange something for you there. And briefly about me too, why do I deal with accountants? Well, I was an accountant myself in practice for 22 years. I know how they think. I know how they talk. I know what they like, what they don't like. I'm going to show you some things today that you'll understand your target market better. Helping business owners to know their numbers is my main purpose in life. I want to educate the world on the importance of knowing your numbers in business. Business owners need to know their numbers. They need an accountant that is prepared to prepare financials on a monthly or quarterly basis. That way they identify issues. When they identify issues, that's when they need the business coach to come in and work on fixing those issues. Accountants can identify, and by the time you've done Accounting 101, you'll identify as well certain areas of the business, but the accountant has very much closer range. He or she's the scorekeeper for you. Anything that comes up in the numbers on a quarterly, monthly basis is going to be addressed by you, the coach. We're not getting enough people ringing up. Okay, well, gee, I'm an accountant. I can't help you with that. But I tell you what, we better get your coach in this is an area that you need to address. Or they're not seeing a coach at the time. Hey, I have a business coach and have a chat with you. If you want to come to a presentation, they're doing one in 2 days' time. I can book you in for that. If we've got seats available. Other than that, I'm happy to organise a meeting. That's why it's important that you have a proximity of a half-hour drive to the accountant office. There are going to be times when the accountant will call and say, I've got so-and-so in my office at the moment. I wonder if you're just floating around, are you able to pop in? If you can't, it doesn't matter. But if you can, fantastic, because you get your eyeball straight in and you go straight on with the matter. Once the accountant is the most trusted advisor. And once that accountant is recommending or referring somebody to you, that person, the barriers, they don't need to ask about you. They don't need to interrogate you. They already know that you're the right person because the accountant is not going to put them in harm's way with anybody. I can guarantee you of that. That's why we have to develop rapport. It's the biggest thing with the accountants. Just get that rapport. Let them know you don't want to touch their database. You don't want to talk to their clients without them knowing. And you want to work together. So business owners need to be accountable to the numbers. And today we're going to go deep diving into how to work with accountants, how to boost your profits, how to boost the accountant's profits, and most of all, how to boost the profits of your clients. Because once you do that, they'll be clients forever. So are there any questions to date on that? Nothing there? Okay, let's get into some stats. Let's have a look at why business owners stay awake at night. According to the Bureau of Statistics in Australia, and it's the business, Steve, you mentioned the name the other day, the Business Bureau in the US, small business?
SMB, SBA, Small Business Administration.
Thank you, Jeff. Okay, so according to both those entities, and this is what I pick up from GPT, and I got the source. 50% of businesses go broke in the first 5 years, and I tell you that's what keeps business owners awake at night. Joe's got a prospect at the moment who's in his 4th year of business. So I said to Joe, what a good statistic to open up to this guy to say, do you want to be the 50% on the right side or the wrong side of the ledger? We're in the process of getting to meet the prospect's accountant, even before we've engaged. Because Joe going in to see the accountant, well, number one, that client has an immediate respect for Joe. You really want to see my accountant? You mean the scorekeeper, the person that says no to everything? Your game. Number two, when Joe gets to meet the accountant's going to turn around to Joe and say exactly what the prospect said to Joe. You're different to every other business coach I've spoken to. That's exactly what we want to be, different to every other business coach they've ever spoken to, because the industry, I've got to tell you, has been tarnished for many, many years, because there's no regulation. So Joe's walking into a situation where if the client doesn't like him, the accountant may well like him, and they may want to talk about other things. This is the sort of thing, and you're not going in desperate. You're going in there because you've identified something in the financials, which, hey, about 35% of coaches can do in the world. You've identified something in there that you want to bring to the attention of the accountant to verify with the accountant, so the accountant can show his knowledge, because they've all got big egos. He can sit there and show his knowledge as to, yes, you've got that right. Okay, now looking at why most businesses fail in the first 5 years. Does anybody want to hazard a guess or put something in the chat to the effect of how that might happen? Why do they go broke in the first 5 years? Got something in the chat, getting some things in the chat. Cautious people, I'm trying to get meetings with the four accountants we've selected. Okay. One gatekeeper. Oh, okay. So the four. Steve's had a selection of 4 accountants already, or he had a selection of 11. I knocked it down to 4. One gatekeeper has so far arranged a meeting 1 month out for 15 minutes. Okay. Another will be checking back on timing with me next week. Here's Steve going in there saying, I'm looking for an accountant. I want an accountant. This is typical. We've got to keep looking, Steve. That's all. Corporate extended filing deadline. See, another there, death by deadline. Here we go. 2 requests out with messages. My golly. Des, run out of cash, you're saying? Yes, perfect. Exactly right. 82% of people ran out of cash. So 82% of those people didn't have a look at their figures before they started, and they didn't have a look at their figures during. Well done. Not watching the numbers. Yes, Steve, on the money. Joe, cash flow. Yes, we've had a few instances of a few examples of cash flow situations. And again, if they're not doing a feasibility study and they're not looking at, and they're not keeping on their numbers, they run out of cash and then it's too late. But you're all on the money there, guys. Fantastic. Never getting paid, Jeff, is something that creates cash flow issues. So, and again, going back and managing their accounts receivable or bringing to their attention, have you looked at your accounts receivable lately?
Yeah. So, well, I did research for my book, of course, and talked about this. And what's interesting is the average small business owner in America, and this is people, with 5 to 10 to even, $1 million in business, makes less than $60,000 a year. And that number has not changed for years.
That's right.
And average employees making 58,000.
Yeah. So, well, Joe's got a plumber making $52,000 a year. There you go. 4 years in business. Good observation, Jeff. And isn't it funny when you start getting active with these things, all these things pop up. They're all starting to become a reality now. But business owners, really in general, they don't seek professional advice. They don't seek professional help. They think, I don't want to pay a professional for that. So they go and, invest probably 100,000 of their hard earned into this business, and it's gone. Where they could have spent $5,000 max, with a good accountant and a good business coach to work together to say, hey, you know what? The coach just checked the market. The market's going to be tough here. In your lessons, to get this thing up and rocking and rolling, we're going to need 9 months of working capital because you're going to go broke in 6 otherwise. I haven't got that sort of money. Well, do yourself a favor. Either go and find some investors, go and find a bank, but that's what you're going to need. Would you think we could have saved a large percentage of those 50% if they just did that exercise? So this is the sort of thinking I want you guys to have, because now you are thinking like in accountants' terms. You're bringing this to the accountant. You don't have to worry about doing the budgets. The accountant will do all that stuff. So all the stuff you don't want to do, he's going to do. But, these business owners, they need good business coaches because, again, do an analysis on the market. What price can we charge in the market? What does your website got to look like? How much is a website going to cost? All these things that you'll be able to put into the meeting, the feasibility study that you're going to do with the accountant to see if this thing's going to stack up. Right at the moment, Steve's looking for an accountant that he can refer clients to. And that's the response he's getting. That's okay. We just got to keep looking, Steve. But anyway, work on the 4, follow up, usual things. The whole thing is, if these people sought professional advice with budgets, feasibility studies, the above stats would be normally very dramatically reduced. But I'm very passionate about helping small business owners because of that statistic, because I'm a small business owner. We're all small business owners in the room. And small business owners, not just in America, not just in Australia, but all over the world, are the backbone of the economy, and they're the least looked after. So another thing comes to mind too, and it was brought to my attention the other day. Be on the lookout for businesses. I'll get to you in a sec, Steve. Businesses that do these government grants. You don't want to get involved in the government grant thing. There's a million moving parts. But engage and look to joint venture with somebody that gets business grants, because you know what they get business grants for? Anybody want to hazard a guess? Just sing it out.
Equipment.
Yeah. What else?
Buy a building.
Yeah. Anybody else?
Business support.
Exactly. Coaching. They get grants for coaching. They get a $40,000 grant. The government gives them 20. Hello. Why wouldn't we go and find the hand that feeds us, guys? So all these little things I'm teaching you, nobody knows about, nobody thinks about. The business grant people are getting grants so they can have coaches, so they can engage you. Okay, Steve. Yes, mate.
Yeah, is the statistic still the same about only 4% of businesses, I think it's in the US, but only 4% of businesses are $1 million or above?
I'd say I have heard of that statistic before, Steve. I'd say that's still relevant. And again, get back to your Chat GPT and verify. Always verify stuff. I'll give you an example. There was a over in your country, there was a debate on yesterday. And the funny thing was they had these people sitting there making them accountable for their statements. Now, you've got to be accountable for your statements as well. So anything that you get that you say, oh, you'd have to lose 25% of your income of your profit of your clients to retain the same gross profit ratio. If you're doing those price, find the source, get the source. Always say the source. I said a source a minute ago, the good, the bad, and the ugly benchmark report. That's an Australian report, actually, but it's a report that says that. So in the world of accountants, they're very engineering type people. Got to keep, we must make sure that we've got all our ducks in a row. Steve, actually get back on that GPT report. If you can bring that to next week, that would be excellent. Why is my thing not working? Okay. So we want to help fix up that statistic. So in our presentation today, I'm going to show you how to potentially work with accountants, how to get accountants on board as joint venture partners. I'm going to show you and express to you the potential benefits or the potential of working with accountants, but also the benefits for the accountant. We go through all those, and you'll also have this information brochure which will detail this. And we're going to go through the power of the joint venture. And when we do that, your eyes will roll and you'll say, hang on, it's as plain as the nose on my face. A lot of things, oh, holy cow, why didn't I think of that? But that's okay. Going to bring it to your attention. You probably do know about it. We want to have a look at the benefits to you, the coach, as well. We want to look at the benefits for the business owner. And I mentioned before the power of the joint venture. Going to go through strategies for building rapport. Now, I will say one thing. There's one word you don't mention with accountants. They get really angsty. Anybody want to? It's the C word. I don't want you to say it aloud. It's the C word.
Commissions.
Correct. Somebody's been listening. Don't ever mention the word. There is an accounting organisation going around offering commissions via a so-called affiliate arrangement at the moment, and that's not going to be very popular. But anyway, how to communicate properly with accountants is big. And you know what? If you do this accounting 101, you've got that basic knowledge, enough knowledge to show that you respect the accountant for what they're trying to do or doing. That is Julie, big. They haven't seen this from coaches before. So when they do, they're quite surprised, and it's a great thing.
Peter, I have a question before you go on too much.
Yes.
So what I see a lot is, there's accountants,
yes.
and then there's bookkeepers.
Yes.
And so there are different firms, they're bookkeeping firms. What's different between a bookkeeping firm or as opposed to an accountant? Because some bookkeeping firms don't have accountants.
Okay. The old regime of a bookkeeper and accountant, Joe, is the bookkeeper, as you went through Accounting 101, we went through the trading and profit and loss statement, correct? That's the line drawn under where the bookkeeper finishes off. They do all the processing of the transactions and get to that stage. That's what we call the trial balance stage. Then we go on to the balance sheet. That's where the accountant comes in, picks up the bookkeeper's work, and then reconciles and balances everything. Bookkeepers do a fair bit of balancing as well. But you come up with a good question there. And it's something that would be very confusing for people that haven't been in the game for 30 years like myself. And it's, excuse me, the situation is that bookkeepers generally enter the data, they produce all the data, then the accountants take over the data, check it, verify it, and reconcile it, balance it back to the balance sheet, everything comes hunky-dory. The accountant then takes that information and then prepares income tax returns, company returns, corporate company returns, etc., etc. The bookkeepers, you know, the old days of the bookkeepers, and I went, you know, were the good days, was when the bookkeeper, you know, you didn't touch anything. The bookkeeper had your check account, actually, you know, wrote out all your checks for you and did this and that. Those days are gone. Like, they're not affordable these days, but generally the bookkeeper, yes, does all the transactional stuff, the legwork. A lot of accountants have an internal bookkeeping division. Now, having said that, Joe, I have come across some bookkeepers that are really into CFO services. And it's a good thing that a bookkeeper can provide the CFO services. So, you know, if you're looking at bookkeepers, check to see if they do that. If they do payroll and they do this and that, well, they're probably not into doing monthly financials. When you look at it, the whole financial overview is done by the accountant. That takes into account not only the expenses for income and expense, or the transactions for income and expenses, but it takes into account the cash flow, which flows from the balance sheet. There are some items on the balance sheet that don't appear on the P&L, like repaying a loan. That's a cash flow item. That's cash out, but it's not tax deductible. It's not a business expense per se. The difference between, I guess we could say, bookkeepers handle income and expenses, accountants handle capital.
Okay.
But great question. Jeff, you had a question?
I'm typing it into the chat here, but in my book, I actually did the research. Like I said, specifically, the SBA statistics said, and this was in 2019,
Yes.
99.9% of all businesses in the U.S. are considered small, having 500 or fewer employees. About 85% have 20 or fewer employees. And again, it goes back to about the 85%. And the disturbing statistic is about 50% of all those businesses will still exist 5 years.
Okay.
And yeah, so that's and then again, according to the pay scale reports in 2018, just under $59,000 was the average income.
Yep.
Whereas, you know, whereas the average employee makes about 55. Anyway, those are the stats right off the books.
Fantastic. There was a comment made by Des. I don't know where Des has gone. Are you still here, Des? I think he is. Actually, he is. No worries. Des made a comment. And Des, I'll just let everybody. Anyway, had my BNI accountant on my local Legends webinar.
You said that.
After putting some general pressure to get some of his clients to one of the webinars tonight is very relevant for my follow-up call with him. Yeah. Des, you know, the other thing is too, you know, you're always, if you want to just say, you know, a CPA, you can use that as well. They always feel a bit comfortable when you've been talking to somebody. When you do the questionnaire, and I'll be sending the accountant questionnaire to you as well, the accountant is going to say, where are you getting these questions from? And you just want to hear that, because then you can say, well, I partner with a CPA and he's given me all these questions to ask to make sure we cover everything, and that, you know, you're going to be the right accountant for me to help me grow my business. If they don't want to talk about growing your business with you, well, don't let it bother you. Just move on. There's plenty of them around, guys. There's seriously a lot. Okay, I'm going to move on. Before we get started, we just talked about the challenges for small business owners and what keeps them awake at night. The three biggest challenges for accountants, and they face this also in offering their value add services to their clients, such as CFO services, etc. Let me tell you a situation with accountants. the client will go in and see the accountant, sign their tax return, and they get an invoice for $5,000 or whatever. The accountant then says, by the way, we've got this CFO services now where we prepare monthly or quarterly financials for you, and we have a meeting with you every quarter to go over those numbers and ensure, and that's that's all they say. We go over the numbers and we look at your numbers and see how you're going. And the client sits there and says, well, I'm not getting any value out of what you do now. Bear in mind the compliance work that accountant does, and I'll go into this in more detail. It is a need, not a want. There's a big difference. People buy wants, they don't buy needs. The compliance check that they give to the accountant for just doing compliance is a grudge expense. When they do CFO services, the CFO services encapsulate all the things that they've virtually done for that compliance, except it's done a year earlier. So it's more relevant. And the accountants can't communicate this. So the three biggest challenges are accountants don't know how to communicate the value of their services to the business owners. They keep talking about the features and not the benefits. It's our job to tell the client the importance of knowing your numbers in business and then sending them back to the accountant. That's our role. Accountants love it. We're taking the angst out of their life. Accountants don't know how to offer CFO services, and they don't know how to offer all their other services. I know that for a fact because I've done several what's called client advisory boards for accounting firms, and they range up to pretty large firms with, large turnovers, mid-tier firms, what we call. And, when we did this, the client advisory board, we get 12 to 15 of their clients in a room and ask them some questions. There's not been a case in, I think, 32 client advisory boards that I've done where the clients know the services that the accountant offers. Not one. Okay. Accountants don't know how to deliver CFO services effectively and efficiently. They say, oh, look, I can't afford it. The clients won't pay for it. The clients will when they're getting benefits, but I show them a method that means they're doing no different to what they do, but they're doing what they do in a different way. And they're actually taking less time to do it, because the largest amount of time an accountant takes with any job is ringing up and asking queries about transactions. Now, of course, the business owner, if it's a transaction that's 18 months ago, in most cases it is, he's not going to go rumbling back through their records and look for that. That doesn't make them any money. So they just, okay. They're continually hunting down information. But imagine this. If they had a bookkeeping division in there that were just churning out transactions, and those transactions were going into reporting software. I won't go into this in too much detail. I'll send you to sleep. But the fact is, if they were continually turning out transactions all the time, they would know what the numbers are. They would, during the course of the year, be working on tax strategies, any other strategies they need to ensure they minimize their tax legally, etc. When they get to the end of the year, instead of having to do 12 months of transactions, they've got about 2 weeks to do. Could you imagine ringing up a client and saying, hey, there's a transaction on your credit card 3 days ago for such and such. Oh, that's for such and such. Bang. They've got the answer, because this is what I call live accounting. So let's have a look at the current accounting landscape. You get to understand things a little clearer here. Business owners are shopping around for fees. Small business owners see compliance as just a commodity. As I mentioned, it's a grudge expense. Now, everybody thinks business owners are price sensitive. They're not. They're value sensitive, and they don't see any value in compliance. The client loyalty is not like it used to be. Small business owners want their accountant to help them with fiscal management, but they don't know that they offer it because the accountants don't tell them. They don't discuss it. And when they do, they discuss it in terms of, oh, this is what we'll have to do. We're going to, get your records each week, and we'll get the bank fees, and we'll code those and transact them, and we'll put them on your records, and then we'll prepare a set of financials. Then we'll look at the financials. They don't want to hear that. What they need to hear is something more along the lines. We've got a reporting device here that when we get your transactions from the bank, they are processed immediately. Our reporting device will tell us how your cash flow is every day, every minute of every day, and every hour every day. If there's something wrong, we'll call you. You don't have to call us anymore. And when you talk about up-to-date financials, they'll be up to date to last week. Go to a bank and tell them you've got last week's financials, and the finance application will go through very smoothly, I guarantee you. So what happens is accountants don't communicate with their business owners to find out why or what they want. They wrongfully assume that the main goal for business owners is to minimize tax. And I can tell you here and now, if you are seen as a commodity, then you start being treated like a commodity and competing on price. And that's the way the industry is at the moment. So we're going to help the accountants now get out of this rotten thing that they've got where they're scared of losing clients. They have coaches also have this same communication issues with accountants. Steve, you're experiencing a little bit of it now, but tell me, in the room, has anybody attempted communicating with accountants?
Mm-hmm.
And how's that gone? Yeah.
Well, I do have a meeting with an accountant, met at a networking group last night, and we had actually a great conversation about working with businesses. And she's actually one of the smart ones to understand, the gross profit ratios, and we talk about that.
Mm-hmm.
And I said, well, if you do that, can we talk? I have a format I like to use that helps me for my clients. And she said, oh yeah, so we're going to be chatting Friday afternoon.
Perfect. Okay. Anybody else?
But she's the first one that's actually, I'd have to say, she's the first one that's actually opened up that conversation and wants to talk.
Yep. Oh, well, that's all good. But how many of you sort of tried to communicate with an accountant that don't phone you back?
Yeah.
Mm-hmm. Yep.
Yeah. Oh, well, you're experiencing that now, Steve. You're going to experience that. See, coaches have this issue with communication with accountants because a lot of coaches will say to me, I find it impossible to deal with accountants. Yeah, okay. I sort of half get that. But the fact is, put yourself in the shoes of the accountant. Why do we have communication challenges? Well, just trying to get this clicker going. What's going on here? Okay, I'll just click here. So put yourself in the accountant's shoes. They're continually bombarded with the next best thing from technology people, financial planners, lawyers, bankers, mortgage brokers, business brokers, insurance brokers, business strategists, consultants, and business coaches. And that's just to name a few. The situation is they've got these people banging on their door with the next best thing all the time. And they've had experience with coaches. Well, they do, the ones that do quarterly accounts all of a sudden say to their client, oh, look, what's this here? You're a consultant. Oh, yeah, that's my new coach. Oh, good. When was I going to see the coach? That's where the accountant forms an opinion. Then they actually see the coach and they come in saying, oh, well, look, the situation is what I'm going to do with your client. They don't say our client. What I'm going to do with your client here is I'm going to take them from where they are now to where they want to be. And where's that? Oh, well, what sort of money's attached to that? The accountant turns around to the client and says, hey, I've just done your stuff for the last three months. This guy's been engaged for 3 months. There's been no change in your revenue or your profit. What are you doing with this dude? And that's why they're very skeptical when it comes to dealing with accountants, and you can dealing with coaches. You can understand why. So they get bombarded day in, day out with the same, I've got the next best thing. You are the accountant that walks in with a set of numbers and starts talking their language, the language of business, which is accounting. So that in itself is very important. Accountants have issues with coaches, as I mentioned, past experience. Coaches don't communicate with them. A lot of promises, no delivery. So let's now have a close look at your target market. You need to define your target market so you can focus on that market. And if you want to work successfully with accountants, you must know how your target thinks, how they react to change, and also where their hot buttons are. Yes, I know you've all heard this before from a number of sources, but today I'm going to show you or share with you some secrets from a 30-odd years of dealing with accountants. Now, I want you to look closely at these next few slides. Okay, this is a typical accountant. It's your target market. It's Monday. He's just arrived at the office and he's ready to start another week of, client complaints, compliance work, tax deadlines, all that beautiful stuff they have to put up with. Okay, have a good look at that picture. Then we go to the next one. This is an accountant just lost a client. The same accountant, he's in his office. It's a pretty flat day. They just lost a client to another accounting practice not far away, and that accounting practice offers CFO services to their clients. The accountant's sitting there wondering, what went wrong? He's met all the client's compliance requirements, lodged all their income tax returns on time, done all that. He's just saying to himself, I don't know, small business owners just expect too much these days. Then I want you to look at this third slide in detail. Now, this is the same accountant, the very same accountant. His assistant has just come into the room and told him he's won $2 million in the lottery. Can you see the difference in the facial expression? There is something here. There is attention to detail here that I can see that you probably can't see. It's very hard to detect by the untrained eye, but let me show you something here. You see that? See that arrow? See the glint in the left eye? See it? That's excitement for an accountant. And that eye, by the way, is his glass eye. Now, all jokes aside, guys, all jokes aside, the situation is that accountants do not show much emotion. What I'm trying to demonstrate here is that accountants are very hard to find their hot buttons. But there's one thing that really gets their attention, and that's their biggest threat. Accountants have big egos, and the biggest threat for them is losing a client. Now, there are two ways for an accountant to lose a client. The client can go to another accountant, or the client can go broke. That is, fail at business. And we know how common that threat is. That threat is very real in today's business world. Now, let me explain why accountants do lose clients. They're very busy with compliance and deadlines. Clients need not want compliance. The problem is that business owners expect more from their accountant than just compliance requirements. They want them to be their advisor, and they just don't communicate this. The accountants don't communicate this and tell them all about the services they offer. Accountants are always filled to the brim with clients. They have this big problem. They find it very hard to say no. So you've got to hit their hot buttons. You've got to take away the threat of losing clients. So, I mean, as I mentioned before, business owners just see compliance as a commodity, and that's all it is. It's a grudge expense. They don't see why they should pay more for the same commodity, and hence they're shopping around for lower accounting fees. So if you want to tap into the accountant's hot buttons, offer them a solution that will take away the threat of losing clients. Offer them an add-on service to their clients that will help them with growing their business, and also offer them a service that will ensure that they don't fail on our watch. Are there any questions with that at the moment?
Yeah. How would you put that using the conversion equation? The problem they have that they don't want, and the result they want and don't have.
Good question.
If you're going to headline it.
Okay, just hang on a sec. Okay, so the question being, how would we put that? Well, obviously with the conversion equation, what's the conversation going on inside their head? How many clients I'm going to lose tomorrow? There's your headline. How many clients are you going to lose tomorrow? Or alternatively, okay, what's the conversation going inside their client's head? Okay, 50% of businesses fail. How do I stop that from happening? That would be on the accountant's website. You know, are you certain of the financial position of your company month by month? Do you know the importance of knowing your numbers in business? Were you aware that 50% of business go broke, 82% didn't look at their numbers? And the engagement is that we have a CFO service that can ensure that you keep an eye on your numbers on a regular basis and ensure that you never run out of cash and you don't fail. Okay, so let's, I'm just trying to get this done. There we go. Okay, so as a business coach, you've got to look at the accountants. Accountants are very protective of their clients and their clients' details. That's why they're the most trusted advisor. As a business coach, you need to differentiate yourself from all other coaches and consultants for that matter. And if you're the coach that can read financials, then you are able to communicate with the accountant in their own language. Knowing the numbers in business differentiates you from most other business coaches and a lot of other business coaches. And therefore, you're going to get their attention because you are different. Market dominating position. Bang. So you are now showing respect by talking their language. It's like going to a foreign country and attempting to speak their language. They give you respect. People complain about the French and people in Paris. They're so arrogant. Of course they are. They have a lot of respect for their language. People walk in there expecting them to just know English. But if you go in there, oh, parlez-vous français? Bonsoir. Oh, don't worry about that. I can speak English. Whereas you go in there, hey, I'd like that cake over there. Thanks. And yeah, get it to me now. You know, obviously a different approach. So it's the same thing. So knowing the numbers in business, as you say, differentiation. Accountants are wary of business coaches. And I know I've mentioned this. And what you've got to do is that you've got to build that rapport with them. They're aware of, they've had poor experiences with business coaches who've overpromised and underdelivered for their clients. They don't have any communication with the accountants and they charge, in a lot of cases, the coach charges more than the accountant. So talk to the accountant about how you can help them with value-added workshops that you'll do on a regular basis and that you'll do all the heavy lifting. Accountants are short of time. When you offer to do something with them, emphasize that it will not take any of their time or their money to do this thing. Okay, they're going to have to buy a couple of sandwiches. I don't think that's a big problem. So the situation is, what you can do in those meetings as well is edify the accountant, edify their services, tell the people about the services they offer and how important it is that they utilize these services. A lot of times the people don't know. And you doing that with the accountant in the room and just say to the people, you know, all you really need to do is go and get an appointment with your accountant. There he is in the room. Make an appointment before you leave and make sure you get those things in place. If you take on the coaching engagement with those clients, the situation is that you keep reminding them of the importance of knowing their numbers in business. Hey, where are your financials? Oh, I don't use the accountant. Well, why don't you? You should be. You need to be. Here's how important it is. Remember, 50% of businesses go broke in the first 5 years. You're in your 4th year. Don't look at the person next to you and say it's going to be them. It could be you. So discuss how you can work together with the accountant. The accountant works on the numbers. The coach works on the goals and the marketing and all the other things that you guys bring to the table, and you don't charge enough for it a lot of times. So you need the numbers to have a scorecard, and you need that for your joint quarterly meetings, because that's what you're going to do. You're going to have quarterly meetings with you, the accountant, and the client. Keep talking to the accountant about our client. because you share the client. These are little words that mean a lot at the end of the day. So this is how you build rapport with the accountant. And once you do that, the referrals start coming. Okay, so are there any questions on any of that?
What was the last point you mentioned there? I was taking a note of the previous one. So you mentioned quarterly meetings.
There'd be the last point would be, okay, discuss how you can work together. Accountant on the numbers, the coach on the goals, and goals include the marketing business strategies. The need and we need the numbers to have a scorecard. That's the accountant's job. And we need those numbers for our joint quarterly meetings where we can come together and we talk about the last 90 days and we talk about the next 90 days. That is extremely powerful. I can tell you here and now, my accounting days, when I made it mandatory to do a minimum quarterly financials, if you were turning over more than, I think it was $2 million or $3 million, you had to have monthly. That was mandatory. And just keeping them accountable to their numbers, keeping them looking at their numbers each quarter on a regular basis, it's enough to make them grow their business. It's called accountability. And it works. Okay, so just being mindful of your time here. I've got about 6 minutes and I want to run through now a quick run through on the selection process for coaches, for accountants. The selection process is basically this, and I'll read it out. When searching for appropriate accountants, you're looking for appropriate accountants. You're searching for them. You're looking for the following characteristics: accounting firms with, I've got 1 to 5 partners here. I say 1 to 3 is probably best to start with. Accounting firms with 5 or more staff members. Accounting firms that offer any one of or all of the following services. Now, bear in mind, I'm sending you an information brochure on this, guys, so don't worry about writing them down. But you're looking for business advisory, cash flow monitoring, budgeting, forecasting, and CFO, fractional CFO, Chief Financial Officer Services. Looking for those words doesn't mean they're doing it. It means they're offering it. There's so many times I run an accounting. Tell me about your process with business advisory. What do you think the answer might be when I ring an accountant and say, tell me about your process for business advisory? What does anybody who quickly hazard a guess to the answer for that?
What happens when you do run into the people who have that process and can explain it clearly and succinctly?
They can't. They never have been.
Are they just? I mean, for those, I've gotten it from fractional CFOs rather than accountant. For
sure. Here's the classic. You ask the accountant, tell me about your business advisory services. You know what the common answer is? Well, with that, if people ring up and ask for advice, we give them advice. That's it. Pretty good, eh? How many clients have you got on that? Oh, there's nobody wants it, but we have it there. Why do you have it there? Oh, just in case they want it. Why? Well, just in case they want that service, we need to have it there. Why? There's accountants pay for about 3 different subscriptions on stuff. They don't ever use it. Tools. Why do you keep paying it? Why? Oh, well, because we offer that service. Fantastic. You've got to understand the psyche of accountants. You've got to question them. Why do you do this, guys? Why are we doing all this? So if we've got a little bit of time, can I run over about 3 minutes or 5 minutes? Is that okay?
Yep.
Everybody all right with that? Fantastic. Because you've had some questions today and it's been great. It's been a while since I've done this presentation, by the way. This has been an updated revamp that I've done. So excuse me for being a bit rusty, but the bottom end of the day is you need to know this target. Now, so many coaches say to me, other things with that selection process, look at geographical areas, what you can do is list 5 accounting firms in your local area. 5, put them on a spreadsheet with their details. And then, we can I'm happy to, have a look at those. We'll go through a few of those next week. This brochure that I've got details exactly what we need to look at, various things that are mentioned on websites. Look for the profile of the partners and the team members. See what they do, see what they offer. You'll find with accountants, I went to Iowa Public's primary school when I was 12. Yeah, that's very relevant. Thank you very much. I went to university and I got my college degree. Whoopie-doo. There's not a thing in there that says how I can benefit you. So we're not about to help them with that stuff either, because accountants really aren't marketing for clients. They're full up as it is. Look for bookkeepers or accountants that don't do tax. They're always good. Contact anyone in that business. Now, when we get into the next session, I'm going to tell you how we get in to see accountants. But today, I'm just going to show you very quickly how we get financials from coaches, from business owners. Now, I wrongfully assumed that nobody has a problem giving you their financials, and nobody's ever had a problem giving me their financials. They've always wanted a second opinion from me, but that's in my position as a CPA, and a fellow CPA for that matter. So, okay. So how to ask for financials, a case study. So basically what you do, you go through the business assessment process, which you call a PAS assessment. The thing is, I will go to that now. And what I'm going to do is I'm going to bring up this. Now, you guys can't see that because it's on the other screen. I'll stop the share and I'll sign and share again. Where are I? Hang on, guys. I'm just going to find my little Tory. Where are we? Right, okay. Okay, you can see my screen there now. An enlarged large site. I know a few of you have seen this before, but let's just look at the scenario here. This is a retail wholesaler in the bedding industry. They sell mattresses only. Let's not worry about the additional products at this stage that they can offer. But when we did the business assessment, the information we were provided with, the revenue was $2,500,000. That's up here. They said their gross profit ratio was 70%. Now, did I question that? No, not at all. And the reason why I didn't question it is because the customer is always right. And I leave that and you'll find out in about 3 minutes why we do that. Okay, that's fine. Got that. Net profit ratio. Oh, that one's a toughie. All right. Well, tell me, take away all your expenses from your revenue and let's divide that into the revenue. That'll be your net profit ratio. Actually, just give me your total expenses and I'll work it out if you like. Boom. So they give you that 4%. You go into the benchmark reports, just on ChatGPT is fine. I put in there, this is a wholesaler, this is a retailer in the bedding industry, sells mattresses only in Los Angeles, in Orange County, Los Angeles, whatever. So I go into there and I find that the gross profit ratio averages at 47.5%. Net profit ratio averages between 5 and 10%, so average is 7.5. So I do this research and then I start questioning, okay, what is their real gross profit ratio? So by reverse engineering, I take the gross revenue and I look up the markup of 70%, which is 170%. And I figure, I'm assuming that this 70% is a markup, not a gross profit ratio. It can't be a gross profit ratio because that's what the figures tell it. So on that markup, Their gross profit ratio works out at 41.2%. As we know, the industry average is 47.5. Let's not worry about the net profit ratio at this stage. So when we look at this, we take the sales revenue, 225, we ascertain the cost of goods sold, which is this figure here. And we've come up with a gross profit of 1,029,000, 41.2%. Average gross ratio, 47.5. We are under the gross profit ratio by 6.3%. This is when you ring the client. I've done some research, and before I present my report tomorrow, I just want to verify something with you. The 70% you gave me for gross profit ratio. Now, do you buy your mattresses from the wholesaler and then mark it up by 70%? Yeah, well, that's markup. Let me explain what gross profit ratio is, how it's calculated. And off you go and do that. That's something more than their accountants told them, and it's something more than any other business coaches told them. So then you revamp, and we look at it and say, what have we got to do? What have we got to increase prices by to get up to 47.5%? And this is the exercise. Our sales revenue, we increase price by 12%. That takes our sales revenue to 2.8 million. That's just to get to average. Sales revenue, 2.8 million, less cost of goods sold, which we got from up here, our reverse engineering. We now got a gross profit of 1,329. Gross profit ratio, 47.5%. Average industry, 47.5%. Increase in funds in the bank account, 300%. Now, this is my rolling ratio down here. If I increase prices by 15%, that'll take us to 48.8%. Remember up here on our research, anywhere between 45 and 50. And that'll put $375,000 in the bank account. Now, the beautiful thing about this is you're showing the client or the prospect that you care. You care enough about it to go and do some research. That wasn't in the brochure. But you've gone to the trouble of doing some research to find out and make sure they're on track. I'll take this back to 12%. Now, also, do you think it's now a pretty easy question, or for you, for a pretty easy thing for you to ask for the financials? Hey, do you mind getting the last financials that your accountant prepared so that I can check this gross profit ratio? And I think we might have to go and see your accountant. Okay. You get the financials. You scribble all over the financials. Leave the scribble. Do your calculations on there. Then you say, listen, I've done all these. Well, I think we really need to go and see your accountant about this. You go and see the accountant. How are you going? I've just done the gross profit ratios on the financials, the last financials you've prepared. I did the net profit ratio as well. But I've come up with a gross profit ratio of 41.2%, and the industry average on my research is 47.5. Have I got that calculation correct? Des, you have. Very good. Hey, who is this guy? Accountant say. And also, I looked further into it, and I did a calculation and figured out that in order to get just up to the average, we need to increase the price by 12%. Now, I've shown our client, already talking about our client, I've shown our client the effect of increasing prices by 12%. And he is quite comfortable with increasing prices because he knows he'd have to lose 45% of his customers before he'd lose any money. So I've covered that. So the whole thing is we went to the suppliers, we couldn't get a reduction in price. So here we are, we need to increase prices by 12%. The accountant is going to turn around and say, I've been telling them that for 3 years. Thank you so much. I got another 244 in the back room here. When can we get to them? Well, let's make another appointment, and I can tell you, how we can work together and really help our client, number one, and help a number of your other clients as well. Bang. Does that help? Does that get you into the account? Does that get you a set of financials comfortably? Does everybody feel comfortable with that?
Mm-hmm.
Okay. So, yeah, that's not in your notes, but that's something I just dreamed up not so long ago. And Have you got any questions regarding that? Nope. Okay. Let's just go back now to, I don't want that. Let's do the one on the end. Bear with me. Okay. So let's just go back a slide. And you're going to have an exercise to do. You're going to get 5 accounting firms for me. And let's look at the situation. How do I get an appointment with an accountant? We'll be working on this next week. See your own accountant first, the obvious choice. And this is going to help you assess your accountant to see if they are going to be the right fit for your coaching business and also for a joint venture. And you could use the accountant questionnaire. I'll be sending you the accountant questionnaire as well. Got a whole bunch of questions on it, but we'll be dealing with that next session. Steve's nodding because he's already got it. If your own accountant can't see the benefit of a joint venture, then you need to look for another accountant. You are now in the market, as Steve is in the market, looking for an accountant that wants to work with him to help him build his practice, an accountant that he can comfortably refer his business owner clients to. So as a potential new client, you will get appointments eventually, Steve. But you're going to stand to get an appointment as a potential client much better than if you're a coach. Now, on the other side of the thing, an interview with the accountant can help you grow your coaching business and is passionate about helping small business owners. That's what you look for. As a potential client, you'll generally get past all with or through the gatekeeper. Also, have a look at their profiles as well of the partners and see which ones deal with this. Some will deal with audit. You don't need them. The ones that deal with business advisory or cash flow analysis, whatever. So then you can ask for the specific partner. I believe so and so does this work with this. That's the one. That's the service I want. So you're getting specific. And also, you've got to think if you'll need a team around this. Another backdoor approach. Now, get referrals from your existing clients. If they haven't got accountants, it's about time they found one. You are going to have, Steve's in the process of finding an accountant, and especially for those that haven't got an accountant, well, you need an accountant, and he's going in referring. There comes some reciprocity from the accountant, back with some referrals. Let's do this monthly thing. And that, to me, honestly, if you're talking to a prospect, I've just shown you how you can get a set of financials, how you can get a meeting with their accountant. That's going to make them very much more relieved with you. You've got the guts to go and see their accountant. Wow, you've got nothing to hide. You're so different to every other coach. Steve was told yesterday. I've never heard that from a business coach. So your project next is to read from Appendix 2, procedure for finding accounting firms for your joint venture. List 5 accounting firms in your local area within 30-minute drive. Prepare a spreadsheet. Use the checklist I provided and the procedure for finding accountants for joint venture. So that's it for today. I'm sorry I have overrun 11 minutes,
Yep.
but I needed to get that little bit in there. I will be sending you in the course of today an information brochure. The next one is a procedure for finding accounting firms. I'll also send you the accountant's questionnaire. And also, I'm going to send you a 10-step sales process for coaches with accountants, which we'll be going through next session. Happy to send that to you in advance. And also an action plan, an 8-point action plan for you to go through and tick off as a checklist. Okay, guys, are there any questions before we get moving?
No.
Other than you're sending us all the text and everything.
Yeah, I'll get those out to you. No worries,
Awesome.
Jeff.
Awesome. Great.
If you've got any questions, just hook into my calendar and grab 15 minutes. And if there's anything that you're not quite sure of, get hold of me. Just use that SOS call. That's the quickest way you'll learn stuff. When we come to the end of this, with my coaches, I will be walking you through the process of finding you an accountant. We will be living, eating, and breathing it. because I don't want you to go out at night anymore. I worry about you guys out at night at those naughty networking events. I don't want you ringing people up you don't know that are going to be rude to you, because I don't like my coaches being dealt that way. I want you to go and join in with these accountants, get referrals from them, join their network, and be part of the scene in the local area. Be part of the corporate, the corporate people that are doing the right thing. That's it. All right,
Thank you
gents,
much.
stage 1 is finished. Stage 2 next week. Look forward to it. And I'm sorry about the overrun, but I just did want to get that last thing of how to grab financials, because you see, the crazy part about it is Steve is now, and Joe is now, and even yourself, Jeff, and Des to a fair degree, because he doesn't talk to me as much as you guys because he's not actually one of my coaches, but I'm helping Des with he's over in Dublin. So you've got to help our Irish neighbours, haven't we, Des? Anyway, the bottom of the day,
Appreciate it. Yeah.
it's okay, but you're all starting to live, eat, and breathe this thing. You're starting to see things that you didn't see before. And you're not looking, they're coming at you, because your head subconsciously is thinking, hey, would that client be good for a joint venture? Would that be good for that? Does that client have an account? They don't. I need to talk to them about how important it is to know their numbers and how to have an account. I can take them to an account. You've got to find yourselves an accountant first as well. And, the reciprocity will kick in, because you'll be the first one that sends a client, and away we go. All right,
Thank you
gents.
much.
Hope you enjoyed it.
Thanks a million.
Yep, awesome.
Same time next week. I'm looking forward to
Good
it.
time.
Okay.
Appreciate it.
Thanks, Joe. Thanks, Des. Thanks, Jeff. And thanks,
Thanks a
Steve.
million.
Bye, mate.